Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 24th of March. I'm Phil Carroll.
I'm Kevin Hornsby.
And I'm Charles Archer.
So welcome to spring. First day of spring, well, was this week, if you want to take the actual one rather than the meteorological. So the days are getting longer, and next week we see the clocks go forward. Great time of year, things warming up now. Looking out the window, it's certainly better than it has been. It feels like it's been a long, bleak, wet winter we've endured. How's things been down in Devon down there, Charles? Have you been hit by a lot of these floods and sort of the damp weather?
No, it's, well, we had a bit of rain, but I'm on top of the hill. We bought a house at the very top.
So it runs off.
Yeah. No, it's funny that extra half of the city is literally built on a floodplain, right? And they say the odds are of it flooding is once every 400 years. The last flood was about 390 years ago. None of these houses can be insured for flooding because no bank wants to touch it for obvious reasons. And the odds of it happening are very low, but not zero.
Yeah.
So I thought, do you know what? It's just not worth it. I'll sit at the top of the hill. And now the sun has come out and we've avoided the flooding for another year. You just know, I'm 100% sure I'll be like 98 and it'll just go one of the days of actual flood and it'll be that. But yeah, no, the summer is coming.
It feels good, doesn't it? It feels like it's a thing now. It's that sort of, the days are getting longer, and yesterday was a really, really nice day. As you call that just felt like spring was here. And
shorts and t-shirt in the park. Yeah,
get the shorts out, living them for the next 8-9 months. Kev doesn't have these problems out there. He probably lives in shorts for like 10, 11 months of the year anyway. So
this would be true. F12 if possible, but no, certainly 10. No, I'm feeling a bit under the weather anyway. Had a minor operation this week, so yeah, I'm not exactly on good form, but yeah, here we are. And spring has sprung. The weather started to improve here. There's only the odd cloud in the sky and 25 degrees centigrade, so yeah, it's not too bad.
Well, let's have a look at some of the news stories that have dominated the headlines this week. I mean, something I want both your opinions on, because I know you'll have an opinion on it. It's this Hornsby women's story, basically.
I just have no sympathy.
I know, exactly. And I was trying to get my head around thinking of it from different opinions. There's always two sides, but basically it's going to be the next scandal, a bit like the post office and a bit like the infected blood. So that the report has concluded that basically women affected by the increase in the UK state pension age must receive compensation for government mishandling. The state pension age for women was aligned with men's between 2010 and 2020, so rising from 60 to 65 and then to 66 without adequately informing millions of women, forcing them to alter retirement plans. The Hornsby Women Against State Pension Inequality campaign, representing women born in the 50s, most impacted by this change, has highlighted the financial losses suffered, estimated between £8,000 and £12,000 for those born from 1953 to 1960. So what can someone really actually explain it? I mean, I get that they feel like they've had to maybe work longer or they quit the jobs and that they were out of pocket, but is this just bad provision and poor planning from the women who have been affected? Why should they have been sent individual letters informing them of this? I don't understand this.
Well, I think, like for example, the high income child benefit limit in the next tax year is rising. So my personal tax affairs are changing. And you have, as a citizen, especially if someone's relying on something like a state pension, you have an obligation to check that things haven't changed. And to be fair to the government, they made the announcement in 1995 and they started implementing it in 2010. That's 15 years, right, where you've had that time to look for it. Now, I think personally for me, they don't have a leg to stand on. And then on top of that, I think the other thing is that there's this idea that, the government will just pay for it, right? The government will just pay them loads of money. They might get like £1,000 each as like a token gesture. But I as someone who's still just about in my 30s, I think it's very unlikely that A, I'm going to get a state pension, and B, even if I do, it'll be when I'm about 70 by the time I get there. I'm not entirely sure why I, as a taxpayer, should fund the Hornsby women's pension to retire effectively from age 60 when I'm not going to get one till 70 or probably longer. So, I have no sympathy at all. Now, had they said, right, we're going to change your state pension age with 1 year or 2 years notice, I would have a lot more sympathy. But 15 years, and in most cases longer, that's more than enough time to adjust your plans. It just is. And the fact is that people are living longer. People need to work for longer. Obviously, that's going to be a massive problem in the future because not all of us can sit around chatting on a podcast all day. But I just, no sympathy. Zero.
Okay. So Charles is Mr. Unsympathetic at all to these people's plight.
No, nothing.
But it did.
He's talked about to be the next big scandal, and it's going to be. I mean, if this was in France, though, Kev, you'd have the gilets jaunes, the burning people. I mean,
you'd have the tractors out. You'd have the tractors out. I mean, I think that the scenario is now that yes, there was lots of notice given. I think what we do also have to say is at that time, provision of personal pensions, etc., in 1995 was nothing like it is 30 years later or 29 years later. So, I have an element of sympathy for them, but the reality is they now seem to be getting penalised, or the government, because they didn't send a letter, not because it wasn't forwarded in the right way. Because someone was going to have to lose out, just like whenever you change the law in a certain way, somebody loses out. Like my pension went from 65 to 67 to 68. I don't know, Charles. Yes, you might be 70 by the time it comes.
Well, even
I'm now fixed. I think at 68. I think it is. So yeah.
I mean, mate, you can access your SIP at 55 currently. That's going up to 57, right? I know that. It's not like anybody. Like you have an obligation to check for yourself when you can access these things. You just do. So, but maybe me having zero sympathy isn't fair, but I have none at all. So, unapologetic.
But that's the nanny state ultimately, isn't it? I mean, we have created that, whether we like it or not. We have created this nanny state, which basically says, oh, if it doesn't quite work out, well, then someone will pay for it, somewhere down the line. And I don't know that is viable, is it?
How many of these WASPy women are single ladies, as in there's no dual income aspect to things, and they were not reliant on the partners, and that not coming off as sounding a bit sort of chauvinist, but do you know what I mean? Is there an element of it, the single income thing going on?
No, I think
I'm sure there is.
It could just be endemic of just there's no financial education in the UK.
Yeah,
that might be the wider story. Nobody seems. Well, you say nobody. Anyone listening to this podcast will have some financial education, but the vast majority of the population doesn't have a clue what's going on.
Okay.
Yeah, absolutely.
Let's leave it there. So, okay, last one, rate cuts. Obviously, there hasn't been any rate cuts. Interest rates remain locked in at 5.25%, with many saying the first cuts won't come until potentially August time. Shock horror, despite the UK experiencing a significant drop in inflation to 3.4%, marking the lowest rate in over 2 years. This reduction was primarily due to a deceleration in the rise of food prices, as well as decreases in the cost of soft drinks and expenses related to restaurants and hotels, as reported by the Office for National Statistics. However, the decrease was partially counterbalanced by increasing petrol prices and rental costs. Despite the drop, the cost of living continues to rise, albeit at a slower pace than before. Chancellor Jeremy Hunt has stated that this indicates the government's economic strategy is effective, while Labour's Rachel Reeves has argued for the necessity of an election, contending that the country cannot endure another 5 years under Conservative rule. Inflation, which was at 4% in January and the same in December, had reached a peak of 11.1% in October 2022. The government are committed to halving the rate in 2023. The Bank of England, aiming for a 2% inflation rate, will consider this latest figure in its deliberations on adjusting the interest rate. So, what are your thoughts? It wasn't a surprise. Is it America didn't adjust theirs, the US, the Fed? Are we just copying them, despite the fact that inflation is dropping down at quite a decent rate now? Discuss why we've just blatantly followed the US. It feels like we are literally copying them on every move.
Well, that's what we do. You've got to keep cable, alive. You just do GBP better. I don't like Switzerland caved. They cut, didn't they? So, it's starting. I think the thing is that the Bank of England have already said they expect CPI inflation to drop below 2% within the next few months, but they then expect it to start rising again. And it's kind of obvious why, because the wage increases, I know not everyone's told this, but the wage increases have now been above inflation for months. And so you've got this situation where you're now going to have inflation chasing the wage increases. Now, we're talking about like rate cuts in August or so. The other thing that I think people need to bear in mind is that, and I don't want to be like a killjoy for rate cuts. There's two things. The first is whenever the rates start to get cut, that tends to be when the recession gets bad in history, whether it's in the UK or the US, Europe or wherever. But the other thing is, 2016 we had Brexit and people didn't think that would happen. And then 2020 we had the pandemic and people didn't think that would happen. And then you had the Ukraine war in March 2022. And then you had Silicon Valley Bank and Credit Suisse and the Hamas war or Israel war. And it feels like there's so much geopolitical tension. There's just assumptions that everything is still going to be fine in the next couple of years. And I can't help but look at the world that we have now and go, hang on, what if there's another black swan around the corner before August? It could well be, something could happen. I have no idea what, but all of these projections are based on everything just continuing as it is. And based on the past few years, every time people make that assumption, something comes around the corner. So that's my prediction. 2024, there'll be some other big event and they won't be able to cut rates again until a little bit later. What do you think, Kev?
I think cheerful Charles is your new
Charlie.
Cheerful Charlie. I actually think I'm not the reverse of what you're saying in terms of a black swan situation, but from an economic event, I believe they should have cut interest rates this week because I think we're going to be behind the curve again. We're gonna effectively, continue to lower levels of inflation, and they've got to try and increase growth as well. And the only way to do that, or the only blunt instrument that they've got to do that, is the interest rates. The pound has held up well against the dollar. For sure, the US are going to start cutting probably next time around. So in my view, we should have cut already and be ahead of the game and be in a situation where, the economy has a chance. And I mean, the other scenario is if it was the Conservative government dictating the interest rates, they're probably cut by 1% last week. So yeah, let's see what happens. But that would be my view on it. Will it pump more liquidity into markets and into other things? I think it would, but we'll have to wait and see.
Yeah, I think on the longer term scale, though, you're talking about interest rates, cuts will come eventually because, as you say, you're going to need them to grow. Probably cut down to about 3%. I don't think it will go lower than that. I don't think the bank wants it to go back to those under 1% rates. But I mean, we're talking in terms of months now. So whether it's June or August or November, December time, it's not going to make that much difference to the macro scale. As long as there's no black swan, it's kind of irrelevant a little bit whether it's going to be in August or a couple of months later, especially if you're talking long-term investing.
Yeah, I think it's more psychology than anything else, but yeah.
Okay. And on to our first guest this week, First Class Metals PLC, UK-based metals exploration company focused on discovering economic metal deposits in northwest Ontario, Canada. Well, we saw the news this week that the company has been awarded a $200,000 Canadian grant from the Ontario Junior Exploration Programme, OJEP. This grant, which covers up to 50% of the exploration expenditures from the 1st of April 2023 to 15th of February 2024 for work on the Zigzag lithium and critical metals property, represents a significant boost for the company. FCM stands out as the only UK company to have received this grant, underscoring its success in securing non-dilutive funding for its projects in consecutive years. The company has also secured a 60-day exclusivity agreement with Emerald Geological Services Limited for the McKinns Lake property in northwest Ontario. This property, which is part of an underexplored greenstone belt, shows promising signs of significant gold and lithium occurrences based on recent field programs. And the third news, it's like London buses. You wait for a while and then 3 appear at once. The company also entered into an agreement to acquire the rights to the Quinlan lithium property in northwest Ontario from Broken Rock Resources Limited. This property is distinguished by one of the highest lithium values in lake sediments recorded in the province, making it a key target for exploration. The deal involves 98 claims, with the FCM staking 50 and optioning 48 from BRR. The funding for this acquisition and the initial work commitment is secured, highlighting FCM's strategic expansion into promising lithium exploration territories. This acquisition aligns with FCM's growth strategies, enhancing its portfolio with a significant land package in an area recognised for its lithium potential. We welcome Mark Sales, CEO, and James Knowles, Chairman of First Class Metals. Welcome, gents.
Hi, Phil. How are you today?
Hi, Phil. Hi,
Very good, thanks. Yeah. Sorry about the long intro, but it's hard getting, breaking them down individually and trying to get the message across that it's been quite a significant week in terms of news flow.
Oh, it certainly has, but it's all positive. And James and I have been burning the midnight oil, writing these things, and James is in charge of uploading them. So, yeah, it's been a big responsibility. But, if we're allowed to give ourselves a wee pat on the back, even in these terrible markets, I think First Class deserves one at the moment, because the OJEP funding, as you quite rightly pointed out, it's non-diluted funding, and it more than adequately covers the execution costs and the first-year work commitments for both the McInnes Lake option and the Quinlan option. So we're sitting quite sort of pleased with what we've accomplished over the last few weeks of negotiation.
Sure. And you just want to take us through, Mark, each one of those bits of news, starting from the beginning, really, the first one with the 60-day exclusivity agreement.
Yes, we've got a 60-day exclusivity agreement, Phil, as you say. To be honest, I very rarely go into an exclusivity agreement unless I've got, shall we say, non-binding understanding of what the commercial terms are going to be. So we're pretty well advanced with what the commercial terms will be for that. And we will end up with, after the first year, and expending only $50,000, 40% of that property. That's the first leg of the commercial terms. So I feel that's quite a good deal for us. And in the first year, following on from the field work that's been done, we'll have a pretty good idea of how we want to focus and advance on that property. So I'm pleased with that deal. The Quinlan Lake one, well, as you pointed out, not only is it one of the highest, if not the highest, lake sediment lithium results from the Ontario government's lake sediment sampling program, but it was also front and center. Literally, it was the photograph was the cover of the resident geologist's report for this year. And she gave it both thumbs up that it's an area of unexplored or little explored lithium potential, but one that contains significant amounts of unsampled, unmapped pegmatites. They flew in there. Dorothy and Leanne, the Broken Rock Resources lady, they flew in there as part of the resident geologist's reconnaissance, and they saw a lot of pegmatites in the area of Quinlan Lake. And that's one of the reasons that we picked up the 50 extra claims, because we discussed it with Leanne, and she said, look, as soon as we do this, the chances are other people will come in behind us. So we picked up those 50 claims, and I've already opened communications with the First Nations group that claim that area as their territorial land. So we're moving ahead, despite the fact that McInnes is only an option, but Quinlan is a signed agreement. It's executed.
Very good. Congratulations, guys. I mean, this is obviously a move forward. I mean, as we've discussed before, the whole concept behind First Class Metals is to take early stage projects, move them up the Lassonde curve, and then start to move them on. So when can we see or think about seeing some of the things that will happen to justify that? Obviously, this is early stage stuff coming back in. What's the situation with Zigzag?
Well, you're right. And we keep banging on that that's our business model, greenfields to greenbacks, although it's Canadian dollars, not American dollars. And we have picked up new greenfields areas. So where's the activity on the other end? Well, we're waiting to hear back from 2 or possibly more groups about interest in not only Zigzag, but other projects. Personally, I think there's more value to be added to Zigzag, but if the price is right in the current climate, then we will look at serious offers for it, as we would any of our projects. Although I do feel with North Hemlow, for example, with that new discovery of the 19+ grammer, that's got a lot of upside yet. So, yes, we are working on it. We're waiting to hear back from people on core and non-core properties as to how we fulfill outwardly our business model.
And is there potential then for more green sites to come in the next period of time?
I wouldn't never say never, but for now, I feel we have a good portfolio, a spread through from, as I say, greenfields at Quinlan to discoveries at North Hemlow to district scale potential at Sunbeam and of course the very successful drill program at Zigzag. I think you can collect too many. There is other opportunities out there at the moment, so I won't say we wouldn't consider more acquisitions, but they might be of a different style to what we're currently pursuing.
Yeah, I think that's a fair comment, Mark. From my perspective, when you look at the market, which is dire at the moment, it does give opportunity, and that opportunity might not be there in a few months' time when the market heats up a bit and the sector turns. So I think it would be remiss of us not to be reviewing opportunities at this stage of the development of the market. So yeah, if something decent comes across our desk and we feel it adds value within our capacity and capability from a financial and management perspective, we'd definitely give it a review. I think it'd be negligent of us not to do if the right assets come across the desk.
Well, let me give you another example, Phil and Kevin. We were approached, maybe a year ago, James, by somebody who had lithium claims over a lake sediment anomaly, nowhere near as high as the Quinlan one. We were approached by them and see if we were interested. This was before we had Zigzag, to be honest. And the figures they wanted as payments and the work commitment they wanted were significantly higher than what we have paid for Quinlan. And those claims have since been dropped and they haven't been repegged. So the exploration can be very fickle. When the market's riding high, and you'd think at the moment with the gold price it would be, but it isn't, but let's stick to lithium. When the market's riding high, then I'm sure those claims could have been options sold for a significant return. But as it turns out, with the slump in lithium, those claims weren't optioned and now they've lapsed. So opportunities come and go. The markets, the exploration space can be fickle and it can be driven. And as James quite rightly says, at the moment in a low, there's good opportunities out there. This isn't a case of just picking up these claims to get on the lithium roller coaster. It's because there's quality potential in an unexplored area, which is what the Seymour Lake, Falcon Lake area would have been 5 years ago.
Yeah, so the levels of lithium that have been found in the lake sediments, that would be seen in the market as what? Is this exceptional? Is this just good? Or, how would it be seen from a geological point of view, Mark?
Well, let's just say there's people putting out press releases with results from rock samples that aren't as high as that lake sediment sample. Would you agree, James?
Yeah, it's one of the highest I've seen from a lithium lake sediment across Ontario, at least. So yeah, very high indeed.
Yeah, I think it's 0.1%, isn't it? It's nearly 1,000 ppm. 10,000 is a percentage. So yeah, it's a tenth of a percent.
From a diluted sample from the bottom of a lake bed.
And is that because the lithium has effectively leached out of the rock then and settled on the base of the lake?
That's right. Yes, it's not necessarily just leached, but erosion would have carried grains of pegmatite, shall we say, and then the lithium would have stuck in the clays in the lake and the mud in the lake bottom. But as you can appreciate, it's a very high sample, and one of the first things we will do in the first field trip is go and try and replicate that, as well as scout around the lake for any outcrop. It will be very much a case of validation initially.
Yeah. I mean, a significant event obviously is going to be some sort of financial deal with Zigzag or another project that you hold, because that is going to obviously release your ability to then move the other things up the Lassonde curve and do the same again, which is basically the principle that you guys have set yourself in this company. Greenfield sites, move them up the Lassonde curve, sell them, and then move on. Now, it doesn't mean there won't be a second or third stage for first-class metals in the future, but certainly that is the project that you've set yourselves, and it seems to be working out well. I mean, obviously the share price right now does not reflect that, but how do you see that progressing in let's say, the next 3 to 6 months?
I'm very pleased as far as the technical side of things, the geological operations, whatever you want to call it, as CEO, are progressing, because we do have, I feel, saleable properties. We've got Sunbeam, we've got Zigzag, we've got the discovery at North Hemlow, and also we've progressed ESSA. with that huge shear zone, gold-bearing shear zone. So we do have properties that are saleable. As we mentioned earlier on, Phil, one of the hesitancies is that we wouldn't be looking for a script deal on these core properties. If somebody wanted to approach us for some of the non-core properties which still have merit, like Cocoa and Able, possibly McKellar, though I think McKellar has amazing potential once we get in there with some zeal and start exploring it seriously. But yes, we are on the verge of completing what we said we would do, and that is get into some serious discussions on one of our core properties.
Yeah, I'd reiterate that, and I think people need to appreciate these negotiations and so forth do take a bit of time to get in place. It's quite an evolving process, which can include site visits and so forth, which, as everybody knows, is quite snowy over there.
They would have to,
at the moment. So let's see what happens when things start thawing and access to these sites is allowed. So yeah, it's a lot of factors in negotiation, and the weather, unfortunately, is one of them, the seasonality. So we'd like to see things progressed at a bit faster pace as we move into spring and summer.
Yeah, I think a good analogy would be that us putting out these press releases is literally the tip of the iceberg. There's been a hell of a lot of work and discussions, negotiations, emails, etc., phone calls going back and forth to reach even a exclusivity, let alone an executed agreement. So, and these are quite small scale in the overall scheme of things. You know, we start talking about Zigzag and Sunbeam, and as James quite rightly points out, you know, a due diligence would potentially involve a site visit. So the iceberg gets bigger, shall we say, if we carry forward the analogy.
And from the point of view of the grant, how pleased were you to receive that? And obviously, as a project moving forward, it helps. Obviously, non-dilutive financing and the ability to award some other projects as well, I presume.
Well, James was very pleased because he's the man that counts the money. So he was ecstatic at the idea that there was 200,000 coming in that we weren't paying commission on, that would be ours, and we won't repatriate it. We will keep it in Canada. It will be the cornerstone for the start of the field season over in Canada. My elation was the fact that 2 years in a row, the Ontario government has looked at first-class metals, looked at what we said we would do, looked at what we've achieved, and awarded us the maximum grant, which, as I said in one of the press releases, I think that's an amazing indictment of what they consider our exploration ability is. And that is in no small part due to Bruce heading up Emerald Geological Services that does the groundwork for us. And I feel, yes, highly complimented as technical director, CEO, whatever you want to call it, me working as a team with Emerald, that we, for a second year in a row, have been identified as people who are successful. I mean, the North Hemlo new discovery, that's what we got the OJEP for last year. So we brought home the goodies, shall we say. This year, Zigzag, or from last year into this year, Zigzag, an amazingly successful drill program. So yes, they are recognizing our ability and recognizing our success. So I'm extremely pleased from a technical side. Obviously, James and myself, the company, are very grateful in a financial sense.
Yeah, I think it's definitely worth pointing out though as well. There's only $5 million each year distributed by the grant scheme, of which the maximum you can claim is $200,000. So there's 25 full grants available, and I believe the intake of applicants is in triple figures. So these grants are dished out not only on being applicable to claim them, but on merit of the project. So I think that's a real endorsement of the quality of project that is being funded by the OJAP to first class. So yeah, a big positive.
Yeah, and let's hope you can make it 3 in a row next year. Let's see.
Well, we'll definitely be keeping our eyes open when the next intake opens, and a new application will be submitted in due course. So yeah, it's something we've been successful with, and we hope to be again.
Very good.
Two things that I saw obviously on the X feed. Firstly was obviously I saw the Zigzag sample winner. So Thanks. Congratulations to Just Shares on AIM. I believe the rock was received, and I've seen some nice tweets on there showing it in pride of place in the office and saying that it will be looked at every day. So that was very well received. And also, Mark, you were in Canada, at PDAC. How did it go? I saw some of the videos and the footage and everything. It looked quite busy. How was your experience there, and what was the sort of general buzz?
PDAC was busy, but the general buzz, Kev, was that there was more service providers than investors. However, having said that, whilst one day in particular springs to mind, I didn't stop talking to people the whole day. I was on my feet talking to people at the booth the whole day. And the majority of them were people trying to sell me things, laboratories, drillers, etc. But having said that, there was 3 people that came by the booth who were serious. And one person looked at the rocks and said, I really like those. Can we arrange a field visit to take this a little bit further? So when you add it up, it was a success. We were arranging a field visit to one of our properties as a result of us being at PDAC and displaying our rocks. A lot of people, a lot of interest. Generally, we're all fighting for the same dollar. Sooner or later, these dollars have got to come out the cupboards, whether they're financial institutions or the Ma and Pa's. So I think that the important thing about something like PDAC, even though it's extremely grueling, I mean, it's 3-4 days stood on your feet all day talking to people and in talking to them enthusiastically. The important thing is that we're out there displaying our wares, competing in the marketplace with a lot of other people doing the same thing, of course. I mean, I don't know what the attendance was. I think it was close to 30,000 this year at PDAC. So you've got to be in it to win it. That's my attitude about these things.
Okay, yeah, I think that's great. I mean, as I say, it's we attended an investment show in London at the sort of back end of start of the month, and there was more of a buzz around that one. We met you at the Minds and Money one, didn't we, in November? Yes. And we attended the Master Investor Show, and actually it was a completely different show. It was there was a lot of retail investors there, and there was a big buzz around it. And obviously, we've seen the recent price movements in copper. We've seen the all-time highs in gold, and I mean, it must be frustrating running a company like First Class with looking at the market cap where it is sort of sub 3 million, lots of very good assets in a very good jurisdiction, but yet there's no real value shown to that company. How do you feel about that at the moment in terms of real world valuations on some of these very small junior companies?
It is frustrating. Of course, it's frustrating because, you live by the sword, you die by the sword. And I've been in the exploration game quite a number of years, as my grey hair testifies. But I believe in First Class. I would stand by our projects as significant, one would hope, develop into something that could be potential world class. I mean, I think Sunbeam has the potential to be a significant discovery. As I say, it's different. But yes, it is frustrating. But as people have said to me year in, year out, when the window of opportunity opens, you've got to be ready to take it because it won't be over long. So the markets will turn. It's a case of survival in these dark times, but also not only do you have to survive, but you have to keep some positivity going, both personally as well as for the investors. And that's why James is very good on Twitter, X, and LinkedIn. I try and support him on those. But getting out news releases, admittedly, as you said right at the beginning, it's like London buses. All of a sudden, 3 come along, as they did this week. So don't expect the same next week. Though watch this space.
Set the bar now, Mark and James. That's the problem.
It is frustrating. Yes, of course it is. But we are braced, prepared, like a coiled spring for when things change. And I think we're really well positioned for that as far as the portfolio that we have.
So, I mean, have you got any sort of parting messages for investors? I mean, obviously, with the grant funding there, the program looks set. What are the next steps in terms of exploration, drilling, etc.? Can you just give us a kind of a roadmap for the next 6 to 8 months or something like that? Would be great.
The focus for me, my preferred focus, obviously, James and I work very closely as a team. I think he made a comment to somebody once that I speak to Mark more times during the day than my wife. We work very closely as a team. For me, the focus, the impetus going forward is to progress North Hemlow because of the new gold discovery there. Well, not new as in last week, but new as in it's a discovery. To progress North Hemlow and in parallel follow up some of the anomalism we have at Zigzag outside of the drill zone, so that we can go in there and open up the blue sky, shall we say. That's if we're not in negotiations about its sale going down the track. But so, yeah, initial focus, gold, North Hemlow. That's my bent on things. James?
Yeah, I would agree. I think that's the operational focus. And on the corporate side, we're still looking to progress the early stage talks and the expressions of interest we've had on several of the properties. As I said before, when the ability to have site visits occurs and get those going and advanced, we will hopefully sooner rather than later be in a position to start putting a bit of colour into that for the market as well. So yeah, and a two-pronged approach, operations and corporate this next 6 months.
And I know, Phil, Kev, the elephant in the room, so I'll point my finger at the elephant in the room before somebody else does, or somebody says afterwards, why didn't they mention it? Funding. It's let's face it, every exploration company is always looking for funding. And we're looking for funding too. I mean, the OJ money is a cornerstone to start the field season. It certainly won't pay for a drill program. So yes, funding is always an issue with junior explorers. So we will need further funding at some stage. That's the life of an exploration company.
Given, isn't it? Yeah, absolutely. Okay, well, on that note, we'll say, obviously, thanks very much for coming on. It's always great to talk to you guys, and we look forward to welcoming you back on in future when next week when you release the sort of 4 or 5 RNSs, because as I say, you've set the bar now. So, but ultimately, yeah, again, thanks very much for coming on, and we'll say Mark Sale and James Knowles of First Class Metals. Thanks very much for your time.
Thanks, Kevin. Thanks, Phil.
Guys.
Thanks, guys.
And on to our second guest this week. We're joined by Sean Wade, CEO of Power Metal Resources. Welcome back, Sean. How's things?
Thanks very much, Phil. Yeah, very good. Very nice to see you again, and Kev and Charles. So, yeah, thanks a lot for having me.
No problem. I mean, obviously, since you've last been on, you announced a strategic move to acquire 75% of GSA Environmental Limited, a UK-based technology firm specialising in the environmentally friendly extraction of strategic minerals or metals from secondary sources like waste products. This £1 million deal, payable in cash and or Power Metal shares, depends on GSA hitting certain profit milestones, including a £1 million profit by year 3. GSA's innovative technology, which aligns with Power Metal's goal of tapping into critical metals for the global energy transition, offers a sustainable solution by turning waste into valuable metals while minimizing environmental impact. The company's technology not only stands to revolutionize metal extraction in regions rich in metal-laden waste like Saudi Arabia, but also promises substantial revenue potential for Power Metal shareholders, potentially reducing the need for dilutive equity financing. This acquisition underscores Power Metal's ambition to become a significant player in strategic metal extraction, leveraging GSAE's expertise to enhance its portfolio's sustainability and profitability. Something a bit different there, Sean, as you expand into waste products.
Yes, and thanks for that intro, Phil, because that very, very neatly describes what we're doing. A couple of things just to sort of be clear on, I think, for people's interest at the outset. Yes, it's different to what we've historically done. I mean, people identify us as an early stage explorer. We've been described as different things. An incubator, merchant banking resources. It's very important for me, from a communications point of view, to get a clear model into people's minds, because a lot of people say, well, you've got lots and lots of things, you spread very, very thinly. It's difficult to know what power really represents and what am I buying? The Malopo Farms, the nickel project? Am I buying your new Saudi Arabia thing? And what is this environmental extraction thing? So I think let's just sort of clarify that for a start. And as you said in the intro, it is about the extraction of critical metals from waste products. And it's the critical metals part that is, if you like, on brand. I mean, if you look at the power portfolio, it is about energy transition metals. I mean, we have the name Power Metal, quite deliberately to talk about the decarbonisation. What we all, I think, on this call, certainly all the four of us would agree, is that impending or developing super cycle in those commodities. So this is a way of enhancing our exposure to those critical metals, giving our shareholders more opportunity in that respect. Also recognizing, I think, a lot of mining investors will know, obviously what tailings are and what the opportunities are presented in tailings. And I think for the mining investor, that's perhaps a way of thinking about this. Is if I would have bought a tailings business, people would say, right, okay, I understand that. That's revenue, it's mining, right? And it's like that, but it's a lot more advanced, and it does a lot more than tailings. And you mentioned in the intro, spent catalysts, heavy fuel oil ash, which is generated by power stations that obviously burn heavy fuel for power generation. And these residues are highly enriched with metal content. If you take heavy fuel oil ash in Saudi Arabia, for example, you could be talking grades, 4.5% to 5%, even higher, of vanadium pentoxide, for example, which is a crucial component of the vanadium redox batteries, which is, by the way, being very happily and commercially mined in Australia, for example, at 0.5%. So enormous grades, enormous opportunities. This company, GSA, has got proprietary technology which can extract that, and it's a major revenue opportunity for us. Now, you also mentioned in the intro that the idea is to become less dependent on dilutive capital raises, and that's very important. As it stands at the moment, prior to GSA, we go to the market for cash. We take that cash, we invest it in exploration activities, and we seek to make a return. And we do that variously through early stage techniques and then into spin-outs, IPOs, and so forth. And I think that's clear. And Charles has been extremely clear in his research that he's done for us on that model, and that model works. We've seen that gold metal, for example, performing extremely well. So that's that. But in my role, you've got to manage the capital base. You've either got to keep going back to the market to get more capital, or you've got to realize cash from the assets. Now, the second part is difficult, because not is it difficult necessarily to sell assets, it's not necessarily the right thing to do. For example, I had lots of shares in Gold Metal Resources, 6, 8 million of cash or whatever it is. Absolutely the last thing I'm going to do is sell those shares in the market. First of all, I can't, because I'm under a lock-in agreement. But even if I wasn't, what does that tell the next person who wants to do business with me? We are a long-term holder and a supporter of that business, and that is the model. Now, do we realize that cash over time? Yes, in the future at some point, but that does not sit in my bank in that sense, for cash. We have sold our position in Kavango Resources, brought in £500,000, but that's very different, very non-core, very small. So our main funding source is the equity capital markets. Now, I think we're going to get on and talk a little bit about how that market works or doesn't work in a moment, but looking for ways to become less dependent on that is extremely important. And that's what GSA will provide. It's going to be, in the view of the board, it's going to be a major revenue generator for us. We will be talking a lot more about it. We are close, we believe, to signing some important agreements and some contracts on that. Don't want to really dwell too much on it, because we obviously don't want to prejudice any conversations we're having, but it will be a generator of news, and most importantly, news about revenue. So I'm very, very happy with what we've done, and I'm really looking forward to delivering that news and that revenue to our investors. But it's going to take a little bit of time. The earn-out agreement we've got stipulates that this business has to be very profitable for the previous shareholders to get paid out, and people will have seen those numbers. That should give an indication of the sort of scale we're talking about. But for it to feed through to our shareholders, I don't want to over-promise, and we want to do that methodically, as we do with everything, and we'll deliver that revenue as it comes. But in the meantime, we are still a junior. We're still dependent on a very, very high cost of capital. I think, and I'm sure Charles will come in on this at some point, there is a serious question in my mind, genuinely, and by the way, this is not necessarily purely a mining point of view. I was in equity capital markets for 20 plus years before I came into this role. And so I've been on the other side. I've raised a lot of money for mining companies. I'm really not convinced at the moment that we are operating, in a functioning market, because for this all to work, for us to deliver value to you and for your share price to go up, we all have a job to do here. My job is to clearly set out the strategy of the business, to market that strategy, to make sure investors see it, understand it, and obviously then to deliver on it, to make the exploration happen, to add the value that we add, to then do the IPOs, to monetize the positions and so forth. The market also has a job to do, which is to appropriately value the assets and to provide a functioning primary market and a functioning secondary market. There is a much, much wider issue here about whether the UK stock market overall works. And there's been a lot on this. I know that the guys at Peel Hunt, for example, have been very influential, and I think they've helped a lot with government policy. We've seen, things like the British ISA and so on. But there are serious questions about, do these markets really function in the interests of investors and companies? Because frankly, if the market can't see the opportunity that this super cycle is representing for hard assets, you need to own land which has got copper in it or uranium in it or whatever that is waiting to be discovered. Yes, which costs money to extract. Yes, which costs money to discover and so forth. But where, the best geologists in the world are saying, well, you've got 18 goes at it. You've got to have a discovery in there somewhere, or whatever the case may be. And if the market cannot see through that and say, right, this is the value of the assets, what that means is that the capital that we need, that we constantly have to keep regenerating, is becoming more and more expensive. And we've all been through the experience. If I have to go back to either our current shareholders or new shareholders, usually at a discount, to say, look, we need more cash. First of all, we have a business to run. We're only 8 people, but we do get paid for this. So, there's a certain amount of...
Are you sure? Are you sure? Why would you get paid for something like this? I thought you were running Power Metal Resources Charity, no?
We also have, as a public company, you have an advisory suite, which is not cheap. You have accountants and auditors and all the rest of it. All of these things have to be paid for. But obviously, most importantly, we have to put cash into the ground. And if you're constantly coming back and having your pants pulled down every time you go back to the market, you never, ever get your head above water, ever.
Yeah.
So the way we see the market is becoming increasingly, I would say, oppositional. The market is sitting there with its arms folded and saying, impress me. Okay, well, we've got this, and this is the work we've done. And look, Charles has written a brilliant note. It's illustrated the value. Yeah, okay, I tell you what, though, the price is 50% lower. Well, why? Why is the market not functioning? And one of the main reasons why this market is not functioning is because so much of the capital that historically has been available to risky assets like exploration mining is gone and probably never to return. So what you've got a lot of reasons for that: de-risking, interest rates going up, the macro factors and so on. You've got other options. If you want to make a bet that's going to make you 10 times your money, we're not the only game in town anymore. Whether it's crypto, whether it's cannabis, whether it's AI, whether it's whatever it may be. If you go back 20 years, whatever, previous cycles, we're the risk guys. Bitcoin didn't exist. Now there's lots of other things you can do. So you've lost a lot of that investment. And where we now are is we're looking at it feels to me like a finite pool of capital. And a very good example of what's been going on right now is my very good friends at Helix Ventures, and I know those guys very well. They're all very good friends of mine, are bringing a fantastic deal to the market with a terrific helium asset, and they're getting fantastic demand for their IPO, and couldn't be happier for them. This is exactly what it's all about. You go to the market with a great idea and you get a lot of investment. But this isn't new money. This is the existing money. So they're coming from somewhere. So they're saying, okay, well, I want to get into this IPO. How do I do that? Well, what's liquid? Well, power metal, that's nice and liquid. Sell some of those, right? Now, that's fair. That's life. I've got to compete for that capital. But that competition is intense. And I suspect that some of these guys will be back hopefully soon because they're not going to get the full allocation, and they're going to say, right, okay, and then we'll put hopefully out some good news and people will come back. But this is it's a diminishing pool that's just going kind of spiraling down and down and down in circles. So we say, okay, well, look, we're in a super cycle here, guys. We're going to have to look for alternative sources of capital here. And you kind of had your chance. Okay, if you don't want to value this properly, you don't want to provide me with a functioning primary market, and you aren't able or won't give me a functioning secondary market where value is realized, then I don't know, family offices, private equity, overseas investors, whatever, there is cash, by the way, that doesn't exist in the AIM market alone. That's where people are going to go. And I think what will happen is, a lot of CEOs will say, what keeps you awake at night, okay, is that, my share price is too low and I'm going to get taken over, at the wrong price. And I've been advising CEOs for many years saying, look, don't, that's not for you to say, right? You let the market take care of your share price. That sounds like special pleading. I can tell you, from where I'm sitting, that is becoming acute, where if you don't see it, somebody else will. And whether that's doing SPV structures just on a commodity basis, or it's doing something like we're trying to do with Power Arabia, where we effectively, we well, not taking out of the portfolio completely, but power shareholders will participate, but saying, let's bring in outside investors from another region where they recognize the risk, but more importantly, the return profile in their own market. Let's do that. You've got to be constantly looking for new sources of capital. And if you remain dependent on what I see as a spiraling downwards, very parochial, sclerotic AIM market, and it is an enormous frustration. And this kind of oppositional thing where companies are feeling that, it's always a beauty parade. You've got to impress shareholders. We know that. That's the game. But it's getting to a point now where just to get your head above the parapet is tough. And I look at some of the deals that have been done over the last 18 months or so with great assets where it was a tremendous struggle to get onto the market, and they've just gone down and down and down and down. And you think, what kind of money, is that? I mean, what kind of investor is that? Is there nobody who wants to take the longer term view here? What people want to do is they want to offer you a really cheap placing because they want to flip the stock in 2 weeks' time at a 20% premium. And we get this all the time. There are people that will chart all their favorite little AIM companies and say, right, he raised money 1st of February, he burns cash at this rate, so by the 1st of September, he's going to need it. So I'll tell you what, I'll offer it to him at a 30% discount. And it's a game. You go and play over there, we're going to go over here, because we can't build a sustainable business that is going to take advantage of this cycle if that's the kind of investor that we've got. No interest. So I realized that's probably sounding a little bit more angry, than I should. And I realized that, we do have to play with what's in front of us. But I can tell you that the level of tolerance is getting quite low, and the alternative sources are becoming more and more attractive. So, guys, I would say to AIM investors, guys, wake up, start valuing your companies better. Look at what the hard assets you've got versus other assets that you have that are not hard assets, and start to appreciate a little bit better what kind of value we're actually adding. I mean, we all have to put up with lots and lots of, crappy remarks from Telegram users or whatever. That's the life. I mean, you don't mind that. But this sort of building narrative, lifestyle company, the directors, they're just raising money to pay their salaries. I mean, fuck's sake, we are trying to deliver for shareholders, and we work very, very hard at it. And it's getting to a point now where you think, okay, look, tell you what, I'll go to Saudi Arabia and get my money.
I'll go and play the game somewhere else. I mean, I think who can we point the finger at in this particular cycle, even regardless of the fact that the liquidity is quite obviously not there at this moment in time? I mean, can we point the finger at the market makers themselves, because the market makers themselves are not holding any stock? Is it just down to the market makers? Is it down to the investors themselves who are so short-termism? 3 years ago, this wasn't the case. We had a huge bull run, and people were like, yes, I'm in this. I'm in it to win it.
There was a lot of furlough cash driving that liquidity now, wasn't there? And that's the difference. People have now been beaten down so much because the market's been so just, been awful, that money's gone now, as Sean said. And I think that, as you alluded to a few times, Charles, with the interest rates at sort of 5% on savings now, and even inflation's dropped, and they're still higher than they were when inflation was more rampant. Why would you take the risk when you can get 5% in an interest account? Until those interest rates come down, I don't think we're going to see an influx of money back into the market.
But it's the AI bubble, isn't it? Because on the large cap side of things, you put money into Nvidia any point in the past 5 years or so, you've made a huge return. When that bubble pops, and eventually it will, like all bubbles do, you'll see a lot more cash flow back into the small caps and the risk sectors. The thing that frustrates me about the placings and the raisings at the moment, as Sean says, yes, it's a short-termist viewpoint, but it's also the fact that the individuals who are actually putting the money up, right? Because there are individuals, doesn't matter whether it's family offices or brokers or whatever, there's people, and what they're demanding is a discount plus warrants, right? It used to be a case that you got a decent discount or you got a small discount with some warrants. And what it is now is they all seem to be demanding you give us shares at like a 40% discount to what you already are and give us warrants as well. We'll sell those shares immediately and just hold those warrants, for a free ride. And it's a disaster. It's a disaster. You're going to kill the goose that lays the golden eggs. Because as Sean says, what's going to happen is eventually companies like Parametal or, all of these other small caps are going to look for alternative sources of funding. And when you do, you might find that when the markets return, they won't be coming back. But I think, if you look at like Parametal and what you actually have on the books in terms of the balance sheet, there's been times when the balance sheet has been higher than what the market capitalization of the company is. at multiple points in 2023. You've got gold and metal, which is doing really, really well. You've got the Power Arabia stuff. You did that at a placing, was at 1.3 million with a cornerstone investor. You've got Rick Rule involved. You've got Paul Johnson has shares in the company as well. You've got PureBot. It's very difficult to look at Power Metal and go, why is it as market cap? And the reason is it's just complete. The market is just terrible. It's just terrible, but it's not the company's fault. And at some point when the big bubble bursts at the top, all that money will come flooding back in, and it's the people buying shares at the bottom who will do really well in the long term. I mean, in terms of going after GSA and putting that in, that's a really good idea. If you want to get some kind of revenue coming in that's not going to be dilutive to shareholders. The question is, at what point does that start being profitable for metal? So obviously you've got those, the anniversary payments as long as it starts to make money. But Sean, I mean, how many years away are you looking at it and going, right, we've now paid our dues and this is going to make money for us? Is it 2 years from now, or is it day one?
Well, I mean, we set it up, so it's longer dated. So yeah, I mean, we set it up on a sort of 2-year basis, but I don't anticipate, quite honestly, that it's going to take that long. I mean, we're looking at the opportunities that we've got. This, it's the scale. So what GSA does is we go to a major Saudi producer of ash, for example, right, and we'll say to them, right, first of all, you need to do a test program to ascertain the metal content of your ash. Let's say, give it for argument's sake, we'll charge £200,000 for that. We kind of more or less know what the answers are, but it obviously has to be verified and done properly. So we do that, and then once that's been done, we then design a test plant for you, which is built by obviously a contractor, but we get a fee for doing that. And then that very substantially better revenue. And then of course, once that's done and that works, then you go into a full producing plant, which sits on your site. It's a bit like Jubilee Metals do, I think. And that's obviously now working, at which point we take a royalty, and this, runs, well, I mean, you're talking about
rinse and repeat. Forever and ever and ever.
Tens of millions of tons of this stuff that is being, mixed with concrete and stuck in landfill. I mean, and it's a disaster environmentally. And the Saudis in particular here, in this particular case, are absolutely desperate for a solution. So, and, the opportunity in waste generally is absolutely enormous. So quite honestly, without getting carried away, this could be what we've become all about, quite frankly. And whether we IPO it at some point or done it, whatever, we'll see. But the fact is that we paid an option for it. We give them 75 grand worth of stock. I mean, if it doesn't work, no harm done. But it will work, and we're convinced of it, and it'll make a huge amount of money. So the worst criticism I think I can get on that is you've changed the strategy without telling me. Okay, sorry, but
you've got to try something, don't you?
So that will, in essence, mean that you can politely say to the market, go away, in terms of revenue, and I'm seeing this happening more and more. We've got other plays that are all starting to realize if they want to explore, they have to pay for it themselves internally from some sort of revenue producing asset. I think Firing Strategic is also doing a similar thing in Zambia. We've got Lime, I think it is, that they're going to be producing, which was an old Glencore asset that hasn't happened. But their real game is lithium up in Ivory Coast, I think it is. So again, it's a case of needs must in these particular situations. We don't want to necessarily do it this way because it's not the quickest way to go from A to Z. But at the end of the day, if it does get power to the point where you have revenues on a monthly basis covering at the very least all your fixed costs, and obviously from your bullish statement, much, much more than that going forward, because as you say, there is always seems to be money in muck, as they say. That was the old statement, wasn't it? When you have something that has value in it that you're willing to get your hands dirty for to get it out, then subsequently that's going to benefit you. And I mean, I'm intrigued anyway about the whole Middle East. It's not just about Saudi Arabia, but Saudi Arabia specifically is obviously heavily involved in wanting to replace, or not even replace, go alongside its oil assets, its gas assets, because at the end of the day, they're not going to last forever. And people are also saying we don't want to use those anymore. So they have to have other industries other than the oil. And did you find this when you were in Saudi, that this is like, yeah, we need to do this, guys?
100%. I mean, it's the entrepreneurial attitude towards mining at the government level alone is enormous. I mean, the MOU we signed with Ministry of Investment, underlines that. That is a commitment on their part to assist us in getting started, getting licenses, getting joint venture partners, logistical support, all the rest of it. I mean, we're in meetings there a lot where, we talk to the guy and we say, right, this is what we want to try and do. And we've talked a bit about GSA, for example. And, in the meeting, he phones up his buddy at the Ministry of Environment and says, right, I'm sending these guys around. They've got a good idea. Can you make time for them? Let's make this work. It's a very, very can-do attitude. It's really, really impressive. The Future Minerals Forum in January was huge. I mean, it was almost too huge, really, for there were thousands of people there. And it's becoming the go-to, mining conference. I mean, we all know that, the Indaba is, a fantastic jolly when you come out of dry January and, it's raining and all the rest of it. That'll still keep going, I suspect. But I think, the real business is now more and more being drawn into FMF. And that was very clear. So this hugely entrepreneurial attitude, and from the top down in terms of, the political structure is pushing the mining opportunity. So there's a lot of companies or investors, family offices, whatever, who have licenses historically that, maybe they haven't done much with, or they were granted, previously, and they now think, right, well, what do we do? And we come, incubator model, a lot of experience. We have a great slide in our presentation study. We see we've got 4 very experienced geologists between them. They've got 70 years of experience. They've made discoveries in all geographies, all commodities. They know what they're doing. We can design the exploration program for you. We'll do an earn-in agreement, and then we'll seek to monetize that over time, either with another partner, sell it back to you, or, whatever. And they, fantastic. But I've got, I'm very close, I would say, with, 3 deals probably. I don't want to prejudice announcements and so on, but, we're close to being able to say something on that. But I've probably got another 10 or 12 that can be easily followed up. But as we get momentum, get on the ground, they really like the way we want to do it. They really like the techniques we use, and as I say, the sort of methodical, low cost effective exploration. But from the investor side, so and that's how we pay for all of this. They love the incubator model. They love the diversified risk. They can see that they're not putting all their eggs in one basket or one specific copper asset. They're saying spreading across commodities all around the country and all around the region. We could, we're looking to raise a substantial amount of money there, as we said in the announcement on the 12th of March, I think it was. And, we're at the moment, we're looking to do a financing round for what we're now calling Power Arabia, which is a subsidiary of Power Metal, which will then be our next major IPO. And there's fantastic early indications. Now, we're going to start building a book very soon, probably with another visit out there, but the indications of the propensity to, take a meeting on this and to engage on it is fantastic. And as I say, indicates the entrepreneurialism there. So it's a big departure for us again, but it's not a big kind of investment in that sense. I'm not asking Power Metals shareholders to pay for anything. I'm saying we'll raise the money at the subsidiary level, mainly, I would imagine, from local investors. Power Metals shareholders will participate. They'll own it, a chunk of it, as they do with other assets, and then we'll go and deliver exploration discoveries over there, and that'll drive the share price, we hope. So again, going back to the top, where's capital coming from for this? So if I went to the AIM market and said, right, I've got a potential 10 million plus exploration spend that I can deploy in Saudi Arabia, what's the price? I wouldn't even bother. It's an absolute waste of time. Because, 0.25 penny. I mean, look what happened to poor Helium 1. I mean, forget it. There's no way. I haven't got the time to even, do the meetings. I'll go and find the money that understands the opportunity, that wants to do it, that's ready to go, and we'll just go and do it over there. And that will mean, I'm delivering for Power Metal shareholders, but I'm not giving, they're not getting the percent of it because the market's not open for that. Now, if the market wants to open up, and if people listen to this to say, whoa, hang on a minute, whoa. I'm happy to pay a premium to the share price and give you the money you need to go and explore. Call me, DM me. I mean, that's no problem. But I very seriously doubt the market is open for doing that. So, and as I said, that's the reality. So we're going to carry on driving. We're going to carry on pushing. We're going to carry on delivering, and we're going to make big discoveries. But we're going to look for the most innovative ways to deliver that.
Yeah, and right now you're raising for the UAE, for that to come onto the market as well. So that's something that we talked about last week briefly when you weren't here on the podcast. So how's that all progressing?
That is going very well, and I'm going to say something publicly soon on exactly how well, if you like. I mean, I've got to be a bit careful because I know my advisors are going to be probably listening, so I've got to be a bit careful about sort of preempting any sort of announcements. But I would say that the market is going extremely well, and there are a lot of sort of very conversations going on about how we think about the uranium portfolio generally and so on. So I'm looking forward to updating shareholders on that very soon. But I'm very, very happy with how that's going. I mean, I fully understand there's a question of timing. People say, well, wasn't it supposed to be a Q1 event? I mean, IPOs, even in a functioning market, take time, and sorts of things can happen, which puts you back by a week, 2 weeks, whatever, whether that's, an issue with vending in an asset or, dealing with Canadian lawyers, whatever the case may be. So I think people should not read anything negative into the fact that, this whatever we end up with is going to be after Easter, I suspect. But, what I can say is that, from the point of view of the board, we're very satisfied, very happy with the progress we're making, and looking forward to talking more about that in the short term.
Sean,
Very good.
I've got a question for you. So you raised £1.3 million at the start of February at a slight premium. Obviously, you're looking to raise money through Power Arabia to fund the Saudi Arabia exploration, and you're looking to raise money through the UE IPO. So they're hopefully going to take care of themselves. Where is this cash going? Can you say at the moment, or can you not? Are you kind of, your hands are tied at the moment? Or do you?
We are.
Sorry.
No, that's okay. No, look, we are undergoing a drill program in Malopo.
Lobo, yeah. So that one.
Again, we want to talk more about that. I realise that, there are fingers drumming on desks, all around London.
Indeed.
Wanting to know what's happening there. And we do want to report on that. I'm at the mercy of
the drill bit,
and the drilling people. But, we've progressed the campaign. We want to talk more about it. And we also want to, make a decision on the full extent of the current program. And at the moment, we're drilling a single hole. Depending on the outcomes, it'll determine how many additional holes we drill. So that is, where obviously, a lot of the current budget is earmarked. And we also have the activity that's been going on at Tati. And again, there's more to say on that going forward. We have also undertaken a fair amount of early stage work on the uranium portfolio that
in Athabasca.
In Athabasca. So some of which is earmarked for UBE, so that will probably come back to us. Some of which is not necessarily earmarked for that. And, those work programs, again, cost a lot of money. And I mean, staggering cost of a helicopter and, that region, you would not believe. So
I would believe. I've heard
there's plenty of activity going on, and obviously there's corporate costs. And as I said, there's advisors' fees, audit fees, all the usual things that, suck out your will to live as much as they suck out. But in all seriousness, there's obviously we have the corporate costs. Now we keep those as tight as we possibly can. There's only 8 of us. There's a board of only 4 of us, and we obviously spend as little as we can on that. But it does require some cash, and we have to be mindful that at the moment that's where it comes from. So, but as we said, GSA is going to make a very big difference there, and I'm hoping that in the short term we'll be certainly washing our face in terms of the PLC costs, which, I'm always looking to keep under control and reduce where I can. When we do, for example, we know how we have lots of advisors, influencers and whatnot, but, we try to pay them in stock where we can, give them participation in what we hope is going to be a lot of upside. As part of the comments earlier. And it's all part of the sort of cash management of the business. So, but when more cash comes in, for things like UE. Don't forget also, we have had, and still do a little bit, an ongoing commitment in the new Ballarat Gold assets. Now, we've entered into a conditional agreement with Red Rock to dispose our share of that joint venture, which people have seen, hopefully the TER, which will be, good amount of cash coming back to us, good valuation for our stake, and more importantly, cash comes to us in turn, for selling it to them, but also cash stops going out from us for obviously, in funding. So that will also help. But as it has been the case and as it currently stands, we have to fund that business. So that's also a bit of a not wouldn't be because as a drain, but you didn't understand that.
But if we now look at Power Metal Resources, and I know Charles obviously did the note, and he came up with 3.3p. But surely that 3.3p has been almost blown out the water in terms of the fact that didn't include anything to do with Saudi Arabia.
No.
Didn't include anything to do with this new project, which will create revenue. I mean, for instance, if you just look simplistically on a market basis and say £500,000 a year is created from this revenue production of EBIT, maybe too little, maybe too much. I don't know the exact numbers you're going to be talking about, but that's going to add sort of 10 times that value in actual market capitalization, you would imagine. So let's say it's £500,000, it's 5 million added, £1 million a year, it's £10 million added. And the Saudi Arabia thing, based on what you're saying, Sean, in terms of a £10 million or $10 million or whatever currency you're talking about and going into the ground in these particular projects, is in essence going to be bigger than Power Metal Resources as a whole in terms of its current market capitalization within probably 12 to 18 months. Because these guys don't mess about. Cash is not going to be the issue. It's going to be throw it in the ground, let's see how we get on, and hopefully we're going to get a result of 5-10 times uplift going up the Lassonde curve and all of those things. So, I take your 3.3, but even 3.3 is probably being extremely conservative in terms of what we've got ahead of ourselves. Because my view on it is, if Golden Metal Resources come on to, what Oliver's been doing in terms of pulling rabbits out of hats in terms of all these projects of, whether it's copper, whether it's gold, whether it's, the tungsten, he's still going to find some titanium somewhere. I keep telling him because I keep mixing them up. But, the scenario is, if the grant comes from the US government on this and it's all systems go, which it is already because they're going to start drilling some holes again in Pilot Mountain now to upgrade what it is, then Golden Metal Resources and your holding in Golden Metal Resources is going to be worth what the whole of Power Metal Resources is worth today.
Yeah. No, and I think that's right. I think that, and I'll hand it to Charles on this in a sec, but I think that ultimately, and the way that I want the model to be in terms of, listed entities and some of the parts, I think, is I think that people will start to hopefully value us on a kind of NAV per share basis. And I think, we're not an asset manager. We're an active incubator. Okay. So we do work and we add the value ourselves, as it were. But I think, look, we'll get to a point where Charles's note will say, for the sake of argument, add it all up together, it's 5p. So the discount that's appropriate to apply to on an NAV basis, say, is 20%, right? So we'll we'll call it whatever that number is, 4.25p. And so the issue then for investors is not the sum of the parts, but is what is the appropriate discount. So at a different point in the cycle, that discount will be 40%, at which point Charles will be banging away saying 40%, that's rubbish. And then it'll go as low as 10%, and then someone else, not Charles, will say, well, that's that's probably a little bit tight. So you'll be trading the NAV in the way that you would with an investment trust, for example. And what actually, and I hope that AIM investors aren't insulted by my earlier comments, some of them actually have been commenting recently, I think, very helpfully, very sensibly. One chap said on Telegram, I've always thought this is a kind of an ETF in the making. Somebody said, I invested this because it feels to me like an investment trust. People start thinking like that, then it becomes about the sum of the parts. Now, my job is to deliver more parts such that you can make that calculation. At the moment, I know what my uranium portfolio is worth, but as soon as I've got UBE floated, you've got to price the market.
Yeah, exactly.
We are the same, Power the same. So then I can build my own model at home, and I can say, right, gold metal plus equals X, power metals Y is cheap or it's expensive, depending on your viewpoint. And I think when we get to that point, then that's when you will start to see potentially, you could see institutions, you could see private wealth. I mean, one of the things that I've done a lot of work in the private wealth arena, and there's a tremendous amount of money under management. What private wealth tends to need is a dividend or visibility that a dividend might well be paid at some point, which exploration mining typically doesn't do. GSA may very well do. I'm not promising that obviously, but over time, if we find that there's more cash coming to the business than we necessarily need at a particular point, a dividend is possible. We said that's in our notes to editors, in our RNSs. So I'm not announcing anything, as it were. It's always the case that if we find ourselves in a position where there is revenue and it's the best, and the board thinks that it's the best return for shareholders, I would certainly consider paying a dividend. And of course, if I were to do that, I would open up what is considered to be more than £1 trillion under management of regional private wealth managers who could look at the story. And that's always the goal. As I said, got to find sources of capital, and that's one of them. So opening up new investors. The other thing, of course, is the US OTC, which we talked about. The reason we're doing this consolidation, which did go down pretty badly with some people who fear consolidations because they've seen it turn into huge dilutive exercises with other companies. I appreciate that. That's not what we're doing. We're doing it in order to get onto the US OTC. We did an interview about that. Now, I'm hopeful that is imminent. I can't promise a date, but because there's a compliance process we've got to go through. But we hope to be able to deliver that. We've got the general meeting to vote for the consolidation next week. So assuming that we get through that, subsequent to that, we hope to be able to talk more about the OTC listing again, opening up another pool of capital potentially. Now, how big is it? How active is it? We'll see. A lot of these guys listen to what Rick Rule says, so that's obviously a great help. So, all of this is the IR side of the business. This is where do we go to find these investors? Where
find the cash, absolutely. But the interesting thing is with most of these things, even though, yes, I agree with your sentiment that the market is broken in terms of the way it's working at the minute, these things normally swing both ways too far. Now we've swung too far the wrong way, in inverted commas. And the other way is probably too far the wrong way as well in terms of its overvaluation. Because at some point, I believe in the next, let's say, 1 to 2 years, you will probably be valued higher than your NAV. It's probably a very likely scenario because everybody will see, wow, this is a diverse investment. It's got revenues coming in. It's got lots and lots of upside in terms of all of these assets in different scenarios, whether it be uranium, whether it be nickel, whether it be copper, whether it be whatever. And ultimately, people will be like, oh, I really want that. I really want. And that normally is after the Lord's Mayor's show, if you like. So in other words, now's the time to be buying it, not then, and hold it. And I mean, I know this can become alien to investors over the last couple of years, but buy this, stick it in whatever you want and hold it, because I think this is going to be a really good play. It's already, in my view, highly undervalued. And the exciting thing is that the revenues come in, and also the Saudi thing, which I think will really change the game for what you do.
Well,
so, yeah.
Naturally agree with everything you said there. I mean, just to
something be wrong if you disagree.
But just to underline it, I mean, I was at the Rick Rule Symposium in July last year, where we were obviously, marketing to US investors, and one of the keynote speakers at the conference, Friedland, who I think everybody, well, probably all your listeners have heard of, certainly, and he's a fantastic guy to listen to. I mean, look, he's amazing achievements he's made, and he's obviously a bit of a kind of guru in mining investment circles, but he has this kind of method of delivery, his kind of pugnacious kind of approach. And he says, people always say to me, I've got this copper stock that I like, and what do you think? And he says, yeah, no, it sounds fine to me. He's got a good asset, blah blah blah. He says, right. He said, well, I'm going to wait till it drops 10%, and I'm going to buy. And he said, and that's the stupidest thing I've ever heard. He said, I want to say to everyone, all in the audience, he said, just buy whatever stocks you like, buy whichever ones have got a nice name. It doesn't matter. Just buy mining stocks and then go and play golf for 3 years. He said, this cycle is going up. It's going to fly. There are 200 mines being closed down around the world, where the world is desperate for new discoveries. Just buy as much mining stock as you can and then shut up and go away, which, I wouldn't probably put that to our investors, but, I echo the sentiment, which is, look, we're going to be in a super cycle here. If you think that the company is well run, you think that people are motivated, you think that they understand what they're trying to do, you think they're marketing the story properly, and you think that they've got a great chance, buy the stock and then let them get on with it. Don't try and game it. Don't try and muck about by, selling it for 20% more and then going by somebody else and all this kind of stuff, because that doesn't help. All that does I mean, I'm not saying people are not allowed to trade the stocks. What I'm saying is all that ends up doing for us is raises the cost of capital. We want long-term investors. I don't want short-term traders. There are a lot of people who say, well, I don't think you do it. Well, then go away then. Right? If you don't like it, you don't like the strategy. I've said that very clearly. If you don't want it and you don't like me, you don't like the way I talk, you don't like what I'm trying to do, I accept that. But, leave me alone. Just sell your shares then. Because what we want is people who recognize the world has got not enough of, you name it. And if you think we've got the right model and you think we've got the right assets, then buy the stock, sit on it and make your returns. But if you try and game it, you try and muck about and you try and fold your arms and say, well, I'm not going to give you the money here, or I'm going to give you the money there, you're making it very, very, very difficult for us. And we're going to just go elsewhere and find it. So I realise that's a bit punchy, probably a little bit more than, people are used to listening to. But, it is a genuine sentiment across the industry, whether you're Robert Friedland at the top or you're me down at the bottom. It's the same dynamic, so that's the message that I think, I would hope people will get, which is hard assets in a super cycle. We've all been here before. You make a lot of money, but if you muck about with it, you'll miss your chance.
Well, I'll sum it up for you, Sean, because this is the way I see power metal at the moment, right? If you're looking for catalysts and you're looking for some share price growth over the next few years, you're going to do this consolidation. You're going to get the US OTC sorted out. You've got Rick Rule as the cornerstone investor. You've got Paul Johnson on board. You've got AR, First Development Resources. That IPO is going to come in Australia. You're divesting from the Red Rock, so you're not going to have that expansion. That's going to be money coming in. In North America, 61% you have of gold and metal. They just raised 750 grand with Pure Bond. They're going to go drill Pilot Mountain, and that's going to be really, really good, in my view. First Class Metals, you have a significant shareholding. They're the only UK-listed company to get a grant, $200,000 grant, Canadian dollars. UEE, Uranium Energy Exploration, you're going to get the IPO, and that's going to raise some cash. In Africa, there's Saneti with Katorio, there's stuff going on there. Obviously, Tati, the Malope drill results are coming. Then in Saudi Arabia, you've got Power Arabia, where I think that people don't understand about Saudi. There's plenty of cash and not that much skill set when it comes to mining, and that's what you're going to bring in, the expertise. You're going to have the GSA revenue, and you just raised £1.3 million at a premium to what your share price is now. Now you put all of that together and you go, hang on, why is power level languishing down here? The answer is the markets are crap. That isn't going to last very long. And when this super cycle picks up, anyone who's buying now, not financial advice, and waits it out for 3 to 5 years is going to do really, really well. I think that's, for me, and this is why I agreed to write a note on it and why I love chatting to you, because you look at this company, you go, there's so many strings to the bow. One of them is going to pay off. So yeah, that's my thoughts. In a nutshell.
And I think ultimately more than one. But anyway, we had this conversation, Sean, earlier in the week. Obviously, there was a few more expletives involved at that time in terms of how frustrated and angry you were about the situation. And that's why I said to you, let's do this and let's just talk straight from the hip in terms of what needs to happen in terms of the markets and also people and shareholders. Guys, this is one to buy and hold. And yeah, as Charles said, it's not financial advice, but I've bought and I'm holding, so there you go. Thanks for your time, Sean.
Yeah.
Appreciate it, guys. Thanks very much for having me on.
Yeah, it was very entertaining.
Sean Wade, CEO of Power Metal Resources, thanks very much for your time. Should we have a look at some of the movers and shakers of the week then?
Yeah, let's do it.
Absolutely. Okay, so I think if you look at the sort of the movers over the last 5 days, you've got XL Media up 97%, APQ Global. Some of these companies are not even on our radar, but you just look at them on SharePad and say, wow, 83% up. IMC Exploration, it's one we've talked about before. Armenian Ireland, 65% up. And Symphony Environmental, they seem to be featured quite heavily, a lot of 40%. Oracle Power, one from Blast from the Past, up 36%. So we've also had a good week for technology and minerals, and we had Robin and Alex on, and I know you wrote quite a contentious piece on this. I saw, Charles, you like to stoke a few fires there, don't you?
I'll tell you what.
Thoughts on it?
I do know. Well, technology, obviously they've signed this new funding deal, so I was pretty confident. Two things: that they'd found some sort of alternate funding, which they have, and that the previous source of funding they had, CLG, was shorting the company. You can't guarantee that's what's going on. No one can prove it. But that share price action was pretty clear what was going on. And I just, I think this is the thing, right? With these small cap companies, whether it's TM1 or anybody else, where like the market cap is under, say, 20, 30 million, and the odds are stacked against you because they're high risk companies, you accept that there's a chance that you're going to lose your money. Right? You accept that. But what's not acceptable is when you go to a lender who gives you money and then uses that weak position and that strength they have over you to screw you over. And watching them slash and burn is just absolutely glorious. And I just wanted to pile the pressure on just for fun, just to enjoy it. Now, yeah, I think TM1 now with this clients that they've just signed, with the funding that they've got in place, they have a real chance. As long as they stick to the deadlines they've imposed on themselves, they have a real chance of solid growth and doing really, really well in 2024. But having said that, they've replaced their old funding agreement with a new funding agreement, and it's exactly the same, which is that they have to get to the point where they're generating revenue and profitability and everything else within the next kind of 12 months or so, or the financing can strangle them. But then again, we're in these markets where they didn't have much of a choice, and now at the very least, they've got a supported partner rather than one that is, again, not an accusation, I might be wrong, but one which is trying to deliberately destroy them. But
yeah, I mean, we've obviously got the India announcement. They've had the Beryl deal as well.
Indeed, yeah, exactly.
They've obviously got this new black mass refining technique, which allows them to get a much higher purity of final content or final product, so that they can effectively go straight to manufacturers rather than having to go and reprocess it again. So we had a good chat with Robin and Alex. But how do you see the company in terms of, do you think now the final, not the final funding, I'm never going to say it, but the recent funding, the 5.5 mil, the new financing deal with these new loan notes, do you think that this is going to give them the funds they need to take the Libat site to profitability and actually get them to revenues?
The way I see it, and again, I'm not inside of a company, I don't know, but the analyst in me looks at it and goes, they want to charge a certain amount to their clients so that the business model is sustainable, right? And their clients are going, like every client would, we want to get the cheapest possible price, right? Now, they have to stand their ground, TM1, because if they don't stand their ground and they go down like the discount route, you might get some revenue initially, but it won't be sustainable. So having stood their ground, the question is, they've got this 5.5 million funding. They're now sustainable at the moment. Will the clients that they're signing on pay a sustainable rate which is fair to both parties? I think that they will, and the reason for this is that there is no other mass scale recycling centres in the UK. So it's not like clients have another choice. And it is a bit of a game of cat and mouse, because if TM1 were to go under, and I don't think that they will in the near future, but if they were to, then their clients don't have anywhere else to go to process their waste. So I think they've got a really good chance. And I think that 5.5 million will be fine.
Advantage and USP.
Yeah. Well, I mean, even like the UK government even highlighted it in like a recent strategy document. The plant they have is the only one of its kind in the UK. Yeah. They're a really strong economic moat.
And they've got a lot of academia working with them, with the Warwick and with Wolverhampton.
Yeah.
And Anwar Sattar on the board as well of recyclers. So it all looks like it's, they've got the right people in the right places.
And it's just a case now of obviously you've got the prospectus that needs to come out. You need the rebranding to go out, and you name Recyclers. And then once that happens, you need to just be able to say, right, we are revenue producing. Now, even if they're not profitable immediately, as long as they've got cash flow, that's the key thing.
Sure.
Is 90% of it. But I do think 2024 is going to be their kind of make or break year. I think at the share price, you had that opportunity when it went to like 0.63p. That was great pricing, right? Yeah. But even now, you've got a good opportunity, and based on the risk-free reward, it's very promising.
Okay, let's have a look at one others that you mentioned to me. I know you follow this company quite a lot, and you've done a lot of. I think you've done a few sort of notes on them or blogs, should I say?
Which one?
Prem, your favourite, or George Rhodes. So there was an RNS basically talking about the lithium plant, the Zulu lithium plant, and the general update. I struggled to read some of the RNSs. It's like, we've got that, but it's not there, and it's done, but we're not sure we're fully done. You know what I mean? It's sort of like, it's one of the Boris announcements. Talk us through how you feel about the latest, and also some of the recent videos that have been put out surrounding the company.
Well, I when they said they were going to make a delivery till like April 2023, I said there was no way that will ever happen. They're going to have a delay, because a significant delay. But when they said that they would deliver in November, I thought there's a very good chance that they would, and they haven't, because that was, they broke down civils in November 2022, so a year to build a plant is about reasonable. And now we're approaching going into April 2024, and there's still no production. Now, the question is, there's a few questions to break down there. Obviously, the first is, how close is the plant to properly operational? Concentrates at SC6 level are now being produced, but are there contaminants? What's the iron level like? What's your actual volume of product you can build? There are a few problems that have been listed. Are these things that are going to take a couple of weeks to solve or longer? How expensive are they going to be? We know the company is carrying some debt. And the key question, right? I mean, so George has called an AGM and asked for the authority to distribute 4.5 billion shares, right? Which is essentially he's gonna issue them very quickly, in my view, to pay off a lot of the bills. And obviously, because of that, that's going to cause like a share price problem in the near-term future. And the only way it's not going to is if the plant produces a high quality and reasonable volume of spodumene that they can give to CanMax before the AGM. Now, I've even made a counter, believe it or not. So you've got 14 days, 4 hours, 32 minutes, and 44 seconds from now for Prem to release an RNS saying that they have produced spodumene at a high quality level, and they, and the plant is working. Because the alternative is you go into an AGM with the plant still not working, there'll be some dilution, and the price you get for the shares are just going to be very, very low.
Yeah. It was a chance of success on that counter being, the subject of it being validified or validated.
Yeah, well, I think is the plant going to work in the next couple of weeks? That's the reality. If you do it before the AGM, then the share price will rise and it will be sustainable to raise cash for the project. But if it's not producing within the next couple of weeks, this is not a secret, right? What will happen is investors will know that there's going to be a raise immediately to pay for bills. What are they going to do? They're going to sell their shares. And then many of them will buy back after the raise. But it means that the money that you can raise from the dilution will not be that much. So I don't know. I mean, the thing is that my personal perspective since November is that Prem should have been pursuing a joint venture agreement with CanMax, which is what Codal Minerals has with Hyman, which is where you give up a significant proportion of the asset, but in return for a lot more financial security. And you have this position now where it was always high risk, high reward, right? It always has been, because you don't have a DFS and you've gone down an offtake agreement route. But now you literally, we're talking a couple of weeks to produce it, and then it's been over a year since it was meant to have produced. If it doesn't do it in the next couple of weeks, then I think you'll have a crisis of investor confidence. But if it does do it in the next couple of weeks, there's only 8 or 9 hard rock SC6 producers in the world, right? Suddenly you'll have an incredibly valuable and attractive asset, even with lithium prices where they are. So the pressure's on, essentially. You're either gonna see that share price crash or rise really, really sharply, and nothing in the middle.
Okay, another news this week. Golden Metal Resources had a nice RNS. Basically, the drill program preparation underway following the £750,000 strategic financing. So, what did you make of that one?
Well, I've chatted to Oliver not that long ago, and the good news that you have is that he's got the 5 exploration targets that he wants to drill.
Yeah.
So you're going straight in with the drill bit, and the idea is we're going to massively increase the mineral resource that you already have at Pilot Mountain. Now, what I did find interesting about the announcement is that Garfield, which is the second flagship, where there's also drill locations that have been identified, there was no money allocated from the 750 grand from Pure Bond, which suggests to me one of two things. Either Oliver has decided it's worthless, and he definitely hasn't, or there's another fundraising going on in the background to do Garfield, maybe a smaller amount. And I did press him on this, and I think he didn't say that it was happening, but I feel like it is. Or alternatively, there's some grant funding finally about to come through, and he wants to allocate it to Garfield rather than Pilot Mountain. Really, you're not really allowed to technically, but really, when money's being spent one way or another, it's fine. But I mean, I look at this and the Pilot Mountain is one of those assets that is just exceptional. Oliver's going to drill it, and I'm confident based on what he knows that the resource will increase, and so will the share price.
So basically, they're gonna drill these multiple previously untested targets and permits. I think they're expected to take around 6 weeks, potentially around that time. And then obviously going to release to market the specifics around that program. And they've also got the copper potential, which is going to investigate, which is also very exciting, isn't it? It's not just a one-trick pony, is it, this Pilot Mountain?
No, obviously you've got the garnet potential as well, and then there's various, I think there's zinc credits in there too. And obviously the key thing to understand about it is that if you're trying to get tungsten out of Pilot Mountain, right, and it's a reasonable grade at the moment, hopefully you'll get a larger resource with a higher grade. But if you're trying to get the tungsten out, if you're getting, 40% of the deposit is garnet, and you're getting some copper out of it as well, and some zinc, and then, silver and whatever else, pops out.
Yeah.
Then the more valuable material you can get, obviously, the better the economics are because you can sell it, but also the operational expenditure drastically falls because, say, for example, you get garnet or copper out of the system before you try and process the tungsten, you're halving the amount of material that needs to go through the majority of the plant. When you're approaching a major and you're saying, right, this is our pre-feasibility study in the not too distant future, you can go, it's very operational. The operational expenditure is very low. And we've got the tungsten, which is, a critical mineral. It's the largest tungsten deposit, which is undeveloped in the United States. And we're going to double or triple the resource with this drilling. So it's one of those investments where I just think it's going to do really, really well.
Yeah,
the only thing.
Well, I was actually going to say, go on to that and on how well it's done. I mean, obviously, it came to admission in May of 2023, so less than a year. And it's like, do you think it's one of the AIM success? Obviously, we can't say it's a success yet because obviously there's many, many things to come and there's a lot more exploration to be done, and there's many things that could be further catalysts. But do you think it's one of the AIM success stories so far?
I think so far, obviously, it's doing really well, but the proof is in the pudding. And the reality is, yes, you've got Garfield and Golconda and Gibby, but Pilot is the flagship, remains the flagship. Yeah. You are at the mercy of the drill bit. And there's two really important points here. The first is that no matter what you do, yes, you need to get a few weeks of the permit, and then it'll take time to do the drilling and time to get the assays. The grant funding could come at any time. But, at the end of the day, while you're waiting for the assays, there's not that much news flow that you're going to wait on. And the second thing is, again, you're at the mercy of the drill bit. So I believe, based on the research that I've done and what, conversations I've had with Oliver from the podcast, just privately over the phone, that what he has is going to be much, much better once these assays come out in a few months' time. Yeah. But you can't know.
That's what I was going to say. I mean, like, if you say, okay, so he does a bit of exploration, they get it underway, and they prove up more of they say, ends further, and they increase the resources. Do you think they're better off, like that, in hope that there could be a delay in any of this grant funding, because the more he proves, maybe the more grant he'll get towards it. I don't know. Will there be?
Yeah, well, that's the issue, isn't it? You'll have to reapply. Maybe. Who knows? When he announced the garnet, which wasn't previously known, this was only a couple of months ago, right? That hugely improves the economics, and it changes the kind of grants that you can apply for and how much money you can apply for. Now, I mean, it's worth noting as well that $50 million of funding for critical strategic mineral deposits was just released. So, that's something else they could go after, and literally just release now for grant funding. So I don't know. I mean, I look at it and I go, this is something that could do really, really, really well. And it's just a case of what's the next news flow going to be. And, I think, I don't know, but I'm assuming that Oliver wants to get Garfield drilled. He could have allocated some of this money from Pure Bond to do it. He's chosen not to. So something else must be coming in to make that happen, that secondary project. And then when it does, you just drill, baby, drill. It's the name of the game. And all you can do is just drill the asset and see what comes out. And I think it will go really well. But again, who knows? You can't know for sure.
No, okay. Let's move on to Greatland Gold. Obviously, we had Sean on the show a couple of weeks ago, and we were asking him about the news that came out about Newmont's decision to divest some of their non-tier one assets, and obviously that were Havieron and Telfer appeared on that list. So, what are your thoughts on that? I mean, I've seen a few little notes that have gone around from sort of analysts, I think, that have said that potentially they might end up taking on the full 100% and also maybe Telfer. But how do you see this panning out?
Well, there's so many different ways it could go. I mean, the first thing I would say is that Javier the JORC update to the MRE increased mineral resource to 8.4 million ounces of gold equivalent. So straight away, that's 8.4 million reasons to be in the stock, right? That gold will eventually be dug up out of the ground. Now, how that happens and who owns it by the end of it, there's so many things that could happen. For example, a buyer could come in, one of, the Northern Star was mentioned, but, one of the major ASX producers and go, we want to buy Telfer and Javier from Newmont, and also the 30% that's controlled by Greatland from Greatland. That could happen, right? And if the offer is good enough, it'll be very difficult to say no to it if you're in that position. Or alternatively, you might find that somebody comes in and buys out Newmont and Greatland just has another joint venture partner. But the most popular theory, and the thing that I think is most likely going to happen, amongst hundreds and hundreds of possibilities, right? We can't cover them all, but I think Greatland is just going to buy Telfer and Javier. Now, the Grant Samuel valuation, which I think severely undervalues the assets, puts Newmont's ownership of Telfer in at 70% of Javier between 500 and 600 million US dollars. Yeah. Now, we know that Greatland has 220 million Australian dollars of supported debt funding.
Yeah, funding available. Yeah,
we know that Wyloo lent them 50 million Australian dollars, just to tide them over not that long ago. We know Andrew Forrest obviously is involved, multi-billionaire and one of the most successful people in Australia. Yeah. What way? It seems to me that some combination of equity funding, of debt funding, of Wyloo, or the banking syndicate is going to look at the opportunity and goes, yes, we can make a significant profit out of this. Now, the only question, if you're an investor now, with share prices probably hovering around 6p, maybe just over, having leaped up, it's now gone back down again because there is significant uncertainty. And regardless of, the potential profit, uncertainty is something that the markets hate. And the question is, how are they going to make this happen? Is it going to be fair to current investors? Do you want to invest now? I would say yes. Or do you want to wait until after the dust has settled? But what do you think? I mean, I think they're just going to buy it. And they're going to use some kind of debt equity and ASX IPO maybe.
Yeah, I think. I mean, and hopefully, that will be the outcome for many investors. I think it's the best outcome, really. 100%. And maybe they will use the Telfer, nearby for processing. As he said,
they could build their own if they wanted to, but Telfer is worthless by itself now, so it's a liability. So Newmont's going to want to get rid of it. I mean, it's one of those things, isn't it? You can't quite know what kind of a funding deal is going to be done. The only thing I would say is that there's two things here. First is, if Newmont feels like it doesn't get a fair enough deal or valuation, it may decide not to sell it after all. Because, yes, it is not a tier 1 asset according to its personal criteria, but it is still in Australia. It is still something which is quite easy to develop. The operational expenditure should be quite low. The capex is actually non-existent because you already have Telfer. So they may row back on it if they don't get a good enough price, which would be fine for Greatland gold holders who just carry on as normal.
Think about the share price. I mean, because obviously there's probably quite a lot of investors who got in at the sort of 18 to 20p range who are sat looking at it now. I mean, what do you think of that? Would you be inclined to hold on for to see how this all pans out? What are the chances of it all coming to fruition?
Well, I think it's, I make no secret of this. I buy shares when I think they're at the bottom, and that's timing the falling knife sometimes. So you get that wrong. But if you're buying shares, as they're rising really high, that's an expensive lesson to learn. Now, will it get back to those heights again when it's producing in a few years' time? Yeah, I think it's doable. But the problem that you have is, how long do you want to wait? What's your opportunity cost? I would say eventually it will come back for you. This is not a stock that you want to sell out of right now. Especially now, I would say especially now, because once the uncertainty goes away, once they say, right, we're either buying it or someone else is stepping in or whatever it is, the share price will rise to accommodate that certainty. One thing that I do think is interesting is if they can't quite raise enough money, Greatland, to buy the assets outright, there could be some kind of deal where Newmont retains a net smelter royalty, for example. And they go, right, okay, well, you just give us as much money as you can afford, and we'll keep like a 2 or 3% smelter, which might affect the economics a little bit, but make a lot of sense. Because I think what it is that Newmont doesn't want to run the project or run the asset. but they probably would be open to some kind of creative financing deal where they get, you know, a long-term revenue stream without having to worry about whether it comes off or not. But I don't know. Nobody knows. All we can do is wait and see what Sean... The one thing I will say is that this has been war planned for months, right? I don't know where I should say it on the podcast, but we've heard the rumours. There are only rumours at this point that the banking syndicate came out and viewed Abiyaran and Telfer for valuation purposes back in December 2023. I think it's kind of an open secret now. So there's, you know, it's not like this is a shocking thing. I mean, and I said way before Newmont made the decision that Newmont was going to continue holding Telfer or Abiyaran because they set out those objective criteria. And regardless of what anyone thinks, these assets did not meet those tier 1 criteria that it set for itself. So if you were the CEO, if I was Sean, and I haven't spoken to Sean, but if I was Sean, the second this came out, I would have gone, okay, they are 100% going to get rid of these assets. We 100% want to buy it off them. How do we make that happen? So those conversations have been going on for months. So that I reckon there must be some kind of handshake deal already. They say it must. You can't know. But I would guess. And all we have to do is wait and see.
Absolutely, it's a waiting game. Okay, so Charles, tell me what are you doing for movies and podcasting? Do you watch much TV and do you listen to any other podcasts? Because I've got a few things that I've been watching of late where I just wrap up sometimes with a bit of light-hearted entertainment. I mean, do you tend to watch much?
Watch TV?
Yeah,
Rage films. I don't know. House of Dragon is coming out soon, but I'll be completely honest. Just have time. I haven't had time since the pandemic started. It's been only 4 years. It's just constant, I think the one thing is if I'm going to make time for some kind of entertainment away from like children or work or whatever else, it's got to be pretty high quality. And I found that like, especially with like TV and films, other than like Spider-Man No Way Home, that was great, or the recent Guardians of the Galaxy film, most films and most TV series really disappoint me. Like the quality of them is so
is when you do 10 episodes of this long series and then the ending is the biggest letdown and you just just given like how much of my life.
My time is valuable now, right? When I was 10 years ago, when I was not particularly well paid, it was quite easy to justify, right, well, I can scrap that £25 an hour and watch TV because who cares? Now my time is more valuable. So you need to make it worth my time. And there's nothing like, it's really frustrating. Disney is my blue chip pick of this year because I think they recognise there's a huge problem and it's up like 30% or so. But, it's really funny because I was talking about how they've kind of ruined Star Wars and ruined Marvel and ruined everything, all of their like assets that they have. And like the reason why you want to make less of it, but high quality. If I know that you're going to go into like a Star Wars, it's going to be brilliant. I will 100% pay for the ticket and go. I'll make the time. But you have no idea what the quality of any of this stuff is going to be like anymore. So just say, have the time, don't have the effort for it. And something good comes out, I'll watch it, and that's pretty much it. And there just doesn't seem to be very much of it anymore.
Yeah, well, I'll make 2 quick recommendations.
Please do.
There was one called Coma, which was on, it's the incredibly talented Jason Watkins. It was on Channel 5 this week, so you'll be able to catch it on Catch Up. It's a gripping narrative, tests the bounds of one man's devotion as his neighbourhood becomes the hunting ground for a tormenting gang of teenagers led by a chilling 17-year-old ringleader. So it's got some pretty recognisable faces in. It's about 4 parts or something like that. I think it started Monday, ended on Thursday. I quite enjoyed it. There's quite a lot of tension there in the air, and as this man lies his way to well, you'll see what happens. I'm going to ruin it in the end, but you'll find out if you watch it. And the other one was on Netflix, and it's Guy Ritchie, who did all the sort of Snatch.
Yeah.
He's one of the best of the British movie directors. He put a new series together for Netflix called The Gentleman. And it is quintessential Ritchie, it's packed with the eccentric, mad as a box of frogs plot lines that we've all come to sort of love of him. Characters are really, really well crafted, and the cast is pretty stellar. You've got Ray Winston in there, you've got Kaya Scolario, who was in Skins, and a few other names that you would recognise. There's
showing your age there with the Skins.
Yeah, Skinny, and I loved all that.
So did I.
Bristol scene and all that lot. But yeah, if you liked all Snatch and things like that, then give The Gentleman a watch, and I can guarantee you will binge watch it on. You'll try and do all sort of 8 episodes in one hit, or certainly over a couple of nights. So that was good. There was a podcast, a really interesting one called 53 Minutes. Basically, Ali Dia. Do you watch football? Do you know the story about Ali Dia? It was like one of the most incredible stories, basically, in football. And it's probably the most notorious hoax that's ever happened. Basically, a Senegalese footballer career in the English Premier League with Southampton in 1996 was legendary. Basically, Graham Souness was the manager of Southampton at the time. He received a phone call from someone claiming to be George Weah, the 1995 FIFA World Player of the Year. The caller recommended his cousin, Ali Dia, falsely claiming he played for Paris Saint-Germain and the Senegalese national team and was looking for a club in the Premier League. Intrigued and perhaps a bit misled by the purported high-profile endorsement, Southampton offered Dia a 1-month contract. And he actually made an appearance for 53 minutes. He was put on the pitch, and the guy, you could see straight away with the way he's running around. He'd never kicked a ball in his life before. Unbelievable story.
Come on, if you had that opportunity, right, I'd make those 53 minutes. Do you know, right, sometimes you realise just how, like, terrible you are at, like, you know, look, I was trying to think of the words. Sometimes I'll get other freelancers to help me when I'm overworked, and they'll send over something they've done in the past, and I just think, oh my God, this is awful. You are terrible at writing. But you don't realise how quite good you are. If I went on a football pitch, I reckon I could hold my own. I think every man in the world reckons.
Flag it. Be running down.
Flag it for like a half. Yeah, 100%. I'd use up all my energy in the first 5 minutes. I score a goal no matter what. All you have to do is score one, and then people will believe you forever.
Absolutely.
I think it's one of those things, isn't it? I mean, like, do you think
it could happen these days that someone will pull a call and go, right, okay, he's George Weah, my cousin's brilliant, and they hired him on the basis of a phone call rather than...
Yeah, but 100%, you know, and I think this, regardless of how much, you know, internet and passports or whatever else, it's very, you know, I think it must happen still. Things like this must happen still, right? Yeah. It just must. For example, right, and I'm not going to name any names at all, but, you know, we do a lot of stuff around like junior resource sector companies. Yeah. So when you see like a non-executive director that you've never heard of before, and there's plenty of them, right? You just assume their work history is true. They could have just written a CV and gone, look, I can advise you on something, and throw them out, put them on board. You know, there must be stuff like that happens all the time.
So, and then finally, this one made me chuckle. Basically, I don't know if you heard this, but hopefully you haven't, and it's the first time. Basically, Lord Mackenzie of Framwellgate, he was a former police boss, admitted in the House of Lords that he chose not to report his wife's stolen credit card because the thief was spending less than she did.
That wouldn't surprise me. I find it's I don't know. Fortunately, my wife it does not have particularly expensive tastes. But then she probably doesn't know quite how well we're doing this year. So I think you've got to be very careful. You go, no, the markets are awful. Have you seen the AIM market this year?
Hold ordering that new TV for a while then.
Yeah. Well, I don't know. I think it's kind of funny, isn't it? I think it's the problem. But then, you know, when you're in like investing and stuff, I know plenty of people, many people, and you'll know them as well, people in their 60s and 70s who have retained all of their money and invested it and got compound interest, and now they're fabulously wealthy, and they're still not spending. And I'm sorry, but, you know, I won't name anybody.
You've got to enjoy it though, right?
You're 67 years old and you've lived like a pauper and you've got 10 million in the bank. Why? What's the point? You know, I don't get it at all.
I get that. You've got to absolutely. It's about memories for me. It's not about splurging it all on all these lavish things like the materialistic things. It's about enjoying and going like holidays and, you know, and having and experiencing things.
Yeah,
that's what it's about, mate. I went shooting. I tell you what I did recently, and I'll tell you, I'm addicted. It could be an expensive mistake. I went clay pigeon shooting, right, and I got my eye in, and I started popping a few of the clays. So I went for lessons, and honestly, man, I'm loving it. I don't know if you've ever done clay shooting, but if you've
done real shooting.
It's. I'll tell you what. When you come up next to London, have a day at my shoot, and see what you think, and you'll really enjoy it. I think
it's super fun. Yeah, I don't know. I think it's you got to have a hobby. You got to spend some money, right? Sure. There is no point in dying a multimillionaire having done nothing. And I think this is particularly true of I wouldn't say younger people, but you live under this assumption that you're going to be able-bodied and fit forever. This is not true. You know, I'm only late 30s. I'm already starting to break down a bit, and I'm in pretty good physical shape. Most people, by the time they hit their 50s, can't do everything that they might want to do.
Yeah.
So you got to spend a bit of
I
money.
think you owe it to the people that you love and that are around you and love you to be the best you can in terms of fitness. And because the fitter you, the better you are for them to be there, and just your mindset. Like I get on the bike every morning and I'm smashing out on the Peloton and doing weights as well. And my fitness and my mental health has improved from that. And I think my family, they can see that around you. So I think you owe it to them.
But even on like a financial basis, right? Like I took 3 days off last week before. You can probably still hear me coughing because I got strep and I got really sick or whatever. That's the first week of sickness I've had in 5 years, right? Because I look after myself. So it's really easy, especially if you're self-employed, to go down the route of, well, I must continue to keep working and not look after myself. But invest, if you lift weights and do a bit of cardio, that is going to keep you from being sick. And overall, you're going to make more money anyway, regardless of like health benefits or anything else, because you're not going to be sick as much. I mean, you do get sick, you get over it quickly. Whereas if you get a cold and you haven't done any exercise in 5 years, it's going to put you down for a week. It's just, that's no way to live.
No, absolutely. All right, I think we've talked enough. It's been a stellar packed show. There's been some good chats there, and I think if you like what you heard, please hit the subscribe icon, hit the bell icon as well for future notifications of any future episodes. I'll say, Charles, thanks for your time as well.
Yeah, of course. Wonderful. Lovely to chat to you. Right, bye then.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.